So my plan for ETH is a little different because I have to manage the position I'm already in, okay? So here's my chart on ETH, and I am basically in the assumption, like I'm going hardcore, sorry cut, I love you. Hardcore in longs in the assumption that we are testing support, kind of like what I said on Bitcoin. And I'm assuming we can go as far as the bottom of the channel. And here's the value area point of control. So like 1500 on a weekly, okay? Obviously, we're not gonna sit there for that whole drop. I will be hedging myself hardcore at this triangle bottom, which is kind of right basically at where the value area high is at. Once we get under this level over here at like 1950, it becomes dangerous for a fast move down to the POC. And no one's ready for this 1600. More than likely, you probably get to like 1780-ish, maybe poke a little bit under it and stop. So that's why I have a heavy short and a heavy long, and my range is like fucking $30 for like the bulk of it, but then I have about a $100 range for a long from the first day that we started when this drop basically got kicked off. So what happened was same thing on Bitcoin. ETH was coming off very, very overbought conditions. And I knew we were going to have a very sharp drop, and that was going to be the only buying opportunity that we were ever going to get, basically. So you can see on the daily time frame what's going on is we're basically testing the shit out of all the longs during the holiday weekend, and we might even poke deeper into this thing to make that inverse head and shoulder kind of situation, but we're hedged. So one side is gonna eventually have to take a loss, but since we have such a sharp decline here, when we do break out, we will have a huge move. And my plan is to basically catch that neckline on the breakout with more longs on the support test. Until then, I'm gonna be abusively shorter, and I'll go in, out, in, out, in, out, until I have the confidence that, the pivot is done and now we're just going to squeeze out people. Until then, it's like, I'm dead ass tired. But you can see the reaction over here. So see, we were overbought. Okay, you can see even on the indicator down here, we were overbought. We came down, we bounced up, right? We're overbought, but this was such a bullish move. I don't think we're gonna break this midline to go lower. If you're looking at the RSI here on the bottom, and then my hand over here now on price, if you look over here on price, that's basically as low as like 1865-ish. So I'm ready on lower time frames with my fib setups, and I'll share you guys this chart right now. So you'll see this chart before I even can post the video. Hold on one second before my dummy forgets. And I'm like making goofy mistakes, so I'm gonna slow down with the trading. And the fact that I'm recording this video and telling you guys this is even like re-corroborating my plan. Everything is marked out in the chart. If you look at my chart, the purple line is the monthly level top that we're about to test, which is the monthly breakout from last month. We can possibly test that and swing failure pattern that. Underneath the monthly is the weekly bottom. So the weekly and the monthly are both stacked on each other with the range of about 60 and $20, and then there's a huge liquidity underneath us at like just under 1800 to like 1780. Okay, so those are the major levels that we can expect a wick to come into, and I'm going to act on in those levels while having my short, and then I'll be closing my short no matter what. Eventually I have to close my short, but I'm abusively being long on the other end with a larger size, and I'm buying every major dip I can, and I'm holding the long and letting go of the long on the retraces every time I can. So right now I have a huge short here at like 19, sorry, I am talking and I am looking at the other chart. So here I'm going to share this chart, like I said, and I'm going to come back to here. Sorry guys, I'm back here. So if you go to the 4-hour time frame, what I am doing is I have a short here at like 1925, basically on the bottom of this order block. So if this order block gets tested this weekend, I will get out of that short and I will get into some longs, and you see the fib line is basically marking everything out for me. And that's basically my plan as of right now. If we basically just shoot up, what I will do is, yeah, my short is going to eat a loss and it's going to be underwater, but I will get abusive on longs once the uptrend is confirmed, and then I can close that short at a loss. It won't matter because I've been scalping longs, I've been scalping shorts. So it's not like I just stood still and didn't make money. I've been constantly trading. So even when market goes back to where it's at, we're not going to be at break even. We scalped so much in the death of everyone else that we're gonna probably make a good buck. And on a 4-hour time frame, it looks like we're about to kick off pretty soon. So I'm gonna let you guys go enjoy your weekend. Just know that long scalps makes more logical sense than shorts. And then if we get a swing to the downside, I'm ready to buy, but I'm already ready to close so much of my shit. I just need 1980 to break, so then I can close some shorts at a loss. I'll keep the longs and everything. I'll take a short at 1980 and I'll close the one at a loss where I had it, and then I'll close the longs in profit. So I'm like re-hedged a level higher, and then if we go higher, I'll do it again. And basically the short is an insurance policy for us to go all the way to like 2,500, 2,300, whatever the heck, okay? So that's the goal. I mean, here, if you check the chart, once we break out of this triangle, you should have like a measured move like 1-to-1, which is like basically this measured fib, and then you go basically like 2-2-2-2-6. Okay, that's like where you're gonna get the next short entry, because I'm gonna hedge myself there for sure. But then if this thing gets parabolic, which all these shorts here are gonna get liquidated, right? So people who shorted here, people who shorted here, people who shorted here, all these guys who started shorting here and selling their shit, they're doing an inverse head and shoulder here in a 4-hour. So once inverse head and shoulder comes to neckline around here at 2,000, people are going to FOMO long again and start closing their short, like me. You know, I'm going to close my short too. And then that's basically what's going to cause the money, basically. And matter of fact, I'm going to take a loss on this large short that's underwater. Cut. I know you don't want to hear that. But this one, if this pump comes, is going to be more painful of a loss. And we could just re-hedge. So there you go. I know you're not going to like that, bro, but don't worry. In the long run, we're going to be fine. The short is an insurance policy. We don't want to hold an insurance policy. We have an hour and 38 minutes into this 4-hour close, probably going to pump up a little bit into the 4-hour close, and then I'll be able to just re-short hopefully around 1968-ish is what I'm looking for. And RSI looks like we're going to try to test the top. So hopefully we break out of that and actually go even float to the 2,000 level, and then it will be even a more advantageous short, because swing failure pattern of this level would be better than a swing failure pattern of this level. Yeah, and that's basically that. Thank you so